Why Bitcoin isn't crashing, even though it feels like it is. Seriously, look at your screen. Red candles, panic tweets, fear everywhere. And yet, something very different is actually happening under the surface. Most people are watching price. Very few are watching behavior. And that's the mistake. Today, I'm going to show you what Bitcoin is really doing right now, why it's not a crash, why it's not a bear market, and why, historically, this exact phase has been the quiet setup for some of the biggest moves in crypto history. If you've ever thought, why does it always feel like I sell at the worst time? Or how does Bitcoin pump right after I give up? This video is for you. Stay to the end, because once you see this, you won't unsee it. Let's break it down. 1. This isn't a crash, it's a transfer of conviction. Here's the uncomfortable truth. Most people think a crash means price going down. That's not what a real crash is. A real crash is when conviction disappears, when long-term holders panic, when fundamentals break, when trust evaporates. None of that is happening right now. What is happening, though, is something far more subtle. Bitcoin is transferring ownership from emotional hands to patient hands, from leverage to capital, from noise to conviction. This phase feels ugly, sideways, choppy, uncomfortable, but that's exactly how accumulation phases always feel. Let me ask you something. When Bitcoin was at $69,000, did it feel safe to buy? No, it felt euphoric. Everyone was bullish. Every YouTuber had a 250K price target. Every TikTok guru was calling for generational wealth. That's distribution. Now fast forward, Bitcoin chops, it dips, it wicks down, it recovers, it stalls. And suddenly people say, this thing is dead, crypto is over, I'm done. That's not a crash, that's a shakeout. And shakeouts exist for one reason only: to remove people who need instant certainty so the market can reward people who can tolerate uncertainty. Let me show you how this works psychologically. Retail investors chase green candles. They avoid red ones. They feel smart when price goes up. They feel stupid when price goes down. So when price goes sideways or slightly down for months, they assume something is broken. But institutions, whales, and long-term holders see the exact opposite. They see reduced volatility, lower leverage, lower hype, lower emotional participation, which creates better entries, less competition, stronger base, higher upside later. Bitcoin doesn't move in straight lines. It moves in cycles. Impulse, correction, impulse, correction. And right now, we're in a correction, not a collapse. Corrections feel awful when you're inside them because your brain says, this is going to zero. I should have sold. I'm an idiot. I'll never recover. But if you zoom out, corrections are where trends reset. Let me give you a real example. In 2019, Bitcoin ran from $3,000 to $13,000. Then it crashed back to $6,000. People said, that was it. Dead cat bounce. Crypto is over. Then Bitcoin went sideways for nearly a year. Flat, boring accumulation. And then 2020 happened, and Bitcoin went from $10,000 to $64,000 to $69,000. The people who survived the boring phase were the ones who benefited from the explosive phase, not because they were smarter, because they were patient. Now here's the part no one tells you. The boring phase is harder than the crash phase. Crashes are emotional. You feel fear, you feel panic, you feel urgency. Boring phases are psychological. You feel doubt, you feel apathy, you feel fatigue. You feel like nothing will ever happen again. And that's exactly when people leave, not because at the bottom of the crash, but at the bottom of boredom. And that's why this phase exists, to remove people who can't tolerate time. Bitcoin doesn't just reward risk, it rewards endurance. Which brings me to the most important point. The fundamentals are improving while price is stalling. This is the part that completely breaks the Bitcoin is crashing narrative. Because if Bitcoin were truly crashing, fundamentals would be deteriorating. Adoption would be slowing, network activity would be falling, hash rate would be dropping, institutional interest would be declining. None of that is happening. In fact, the opposite is happening. Let's talk about fundamentals. Bitcoin's hash rate is near all-time highs. That means more miners are securing the network, more computational power is protecting transactions, more infrastructure is being built. Hash rate doesn't rise in a dying network, it rises in a growing one. Now let's talk about adoption. Spot Bitcoin ETFs have opened the door for trillions of dollars in traditional capital to access Bitcoin through regulated channels. Whether you love ETFs or hate them, they represent institutional validation. Pension funds, family offices, asset managers, financial advisors. These are not speculative traders. These are long-term allocators. And they don't chase tops. They accumulate during consolidation, which is exactly what we're seeing. Now let's talk about supply. Bitcoin has a fixed supply, 21 million coins. No central bank, no money printer, no emergency bailouts. And every 4 years, the rate of new supply is cut in half. That's the halving. And every halving in Bitcoin's history has preceded a major bull run. Not immediately, not overnight, but structurally. Because when new supply decreases and demand remains constant or increases, price must adjust upward over time. That's not hype, that's economics. Now let's talk about macro. Inflation hasn't disappeared, debt hasn't disappeared, money printing hasn't disappeared, geopolitical risk hasn't disappeared. If anything, long-term monetary instability is increasing, which makes hard assets more valuable over time. Gold, real estate, and increasingly, Bitcoin. Because Bitcoin is portable, divisible, verifiable, censorship-resistant, and globally accessible. Those properties don't disappear during price dips, they become more attractive. So when price stalls while fundamentals improve, that creates divergence, and divergence creates opportunity. Most people only pay attention to price. Smart money pays attention to fundamentals during price weakness, because that's when assets become mispriced. Right now, Bitcoin is not collapsing, it's consolidating, while its infrastructure, adoption, and macro relevance are all strengthening. That's not bearish, that's constructive. It just doesn't feel like it, and that's the hardest part. 5. This phase exists to emotionally exhaust you, and that's the point. Let's talk about psychology, because this is where most people lose. Not because they're wrong about Bitcoin, but because they're wrong about themselves. Markets don't just move price, they move emotions. And Bitcoin is one of the most emotionally demanding assets in the world. It will make you feel brilliant, make you feel stupid, make you feel lucky, make you feel cursed, make you feel patient, make you feel impulsive, often within the same week. But the most dangerous emotion in markets isn't fear, it's exhaustion. Fear causes panic selling, exhaustion causes quitting. And quitting happens when you've been waiting too long, nothing exciting is happening, you're tired of checking charts, you're tired of hearing soon, you're tired of hope. That's when people say, I'm done with crypto, I'll come back later. This is a waste of time. I should focus on something else. And that moment right there is often the moment before major upside. Not because the market is evil, but because markets are designed to reward people who can tolerate discomfort longer than others. Bitcoin doesn't reward intelligence, it rewards emotional stability. Let me ask you something. When was the last time you felt excited about Bitcoin? Probably near a top. When was the last time you felt bored with Bitcoin? Probably near a base. Excitement is dangerous. Boredom is powerful, because boredom means the crowd has left, and when the crowd leaves, the remaining participants are stronger, quieter, more patient. That's when markets become efficient again. That's when price can move cleanly. That's when trends can resume. But you only benefit from that if you survive the boredom. Most people don't. They leave. Not because Bitcoin failed, but because they got tired. This phase isn't testing your portfolio, it's testing your mindset. And if you can hold through uncertainty, through boredom, through doubt, you position yourself for the phase that follows, which is expansion. And expansion always feels obvious in hindsight, but invisible in the present. Let's bring this together. Bitcoin isn't crashing. It's doing something far more important. It's transferring ownership from weak hands to strong hands. It's resetting leverage and reducing fragility. It's building a base for its next major move. It's strengthening its fundamentals beneath the surface. It's emotionally exhausting participants to filter out impatience. That's not failure. That's preparation. And here's the uncomfortable truth. The best opportunities never feel like opportunities when you're living them. They feel like doubt, discomfort, boredom, uncertainty, fatigue. Because if they felt easy, everyone would take them. And if everyone took them, they wouldn't be opportunities. Bitcoin rewards people who can see past price, who can see structure, behavior, psychology, cycles, not just candles. If you've ever wondered why, you always sell before the pump, you always buy before the dump, you always lose conviction at the wrong time, it's not because you're bad at investing, it's because you're human, and markets exploit human behavior. But once you understand that, you can stop reacting and start positioning. You don't have to predict the top. You don't have to time the bottom. You just have to stay. Stay curious. Stay patient. Stay disciplined. Because Bitcoin doesn't reward speed. It rewards survival. Let me leave you with this. Every single major Bitcoin rally in history was preceded by a phase where people said it was dead, people said it was over, people said it was a scam, people said it would never recover. And every time, they were wrong. Not because Bitcoin is magic, but because Bitcoin operates on cycles, not emotions. And right now, we're in the part of the cycle that most people don't survive, not because it's dangerous, but because it's boring. If you can see this phase for what it is, not a crash, not a collapse, not a failure, but a setup, then you're already ahead of 90% of the market. And that's the real edge. Not timing, not prediction, not luck, perspective. If this helped you see the market differently, hit subscribe. Not because you need another crypto channel, but because understanding psychology and cycles is what actually makes people money in this space. And remember, Bitcoin isn't crashing, it's preparing. And now you know what to look for. Disclaimer: by watching this channel, you acknowledge that you understand the risks associated with cryptocurrency trading and investing, and you are solely responsible for your own trading decisions. Don't forget to like, comment, share, and subscribe for more.